How are you doing, Arawa? And how is Nasi? Next time, I do not like to see you wearing this short skirt, because you are a matter to me and belong exclusively to me. Understood, Arawa?
I am fine, H. de Boer. Did you bring me here with those criminals and drugs dealers to say how are you doing, Arawa? Or do you want to make sure that skimmed milk, strawberry jello, peanut butter, and slices of roasted bread are brought for your tomorrow's breakfast? Or to talk about my short skirt and cause me to feel embarrassed?
Not at all, Arawa. In fact, I do not like men other than me to look at your beautiful legs. I am a real man, Arawa, or do you think that I am a girl called Sausan? I do the same with the legs of Al-Mualima Shokuria of Al-Sharpia.
What the hell you were saying?
Oh, nothing at all. I want to make use of your being an attorney and my being as a CPA to update the attendances as to how to measure the hashish inventory they hold subsequent to the initial recognition.
Okay, although hashish is not a subject legal matter for contracting and trading, yet it is still to be considered as an item of an inventory. What do you want to start with? I suggest that you start with a statement of rules in this connection.
To all of you, please be alert and pay your full attention to what I am going to say. The subsequent measurement of inventory depends on the cost flow method used. 1. Inventory accounted for using LIFO, and the retail inventory method is measured at the lower of cost or market, LCM. 2. Inventory accounted for using any other cost flow methods, FIFO, and average cost is measured at the lower of cost or net realizable value.
In a case where the cost of inventory is below its market value or net realizable value, a loss on write-down of inventory is resulted. How such a loss is treated in the books of account?
A loss on write-down inventory to market or net realizable value, NRV, generally presented as a component of cost of goods sold. However, if the amount of loss is material, it should be presented as a separate line item in the current period income statement.
Could you please brief us about the main reasons for write-down inventory below its cost?
These are 1. Damage, 2. Deterioration, 3. Obsolescence, 4. Changes in price levels, 5. Changes in demand, and etc.
Is reversal of a write-down of inventory recognized in the annual financial statements allowed or prohibited in the subsequent periods?
Very beautiful and cool question, Arawa. In fact, a reversal of a write-down of inventory recognized in the annual financial statements is prohibited in the subsequent periods. Once the inventory is written down below cost, the reduced amount is the new cost basis.
Are there rules that should be applied when write down inventory below cost?
Depending on the nature of the inventory, rules for write-down inventory below cost may be applied either 1. Directly to each item, 2. To the total of inventory, and 3. To the total of each major category. However, the method applied should be the one that most clearly reflects periodic income.
I think that this is enough for today. What you are going to talk about the next session?
Thank you, Arawa, for your valuable contribution, and next sessions I plan to talk about the legs of Al-Mualima Shokuria.
The tail of a dog never turns straight.
Oh, sorry, I mean about the details of measuring inventory at LCM or at NRV.